Robinhood stock just flashed one of its biggest warning signs in months. The same stock that looked ready to continue towards $150 is now losing key moving averages. Momentum is fading across nearly every time frame, and a much larger correction could be starting. The big question is this just a healthy pullback before the next breakout, or is Hood stock about to enter a deeper bear market? In today's Robinhood Stock Analysis, we're going to break down every time frame from the monthly chart all the way down to the 1 hour chart to see exactly where the next major support is, what levels the bulls must defend immediately, and whether Robinhood stock still has a path towards $150 or if the bears are about to take control. We're going to start off here with the monthly chart. Right now, the price of Robinhood is at $86.56. The last time I made an episode, the month of July was looking pretty green, and we were all the way up at $120. So I was thinking if July could close green, that could give us a pattern called the 3 white soldiers, which is 3 green candles in a row, and then that would have given us a bullish continuation. Now I have this in a possible falling wedge here. There's 2 patterns here, so just worry about this line, and the measured move takes us to about $158. Technically, we're still breaking out of the falling wedge pattern, but for July, we did close red, a big red engulfing candle. We are holding above the 21 moving average, which is at $84.03. So that's going to be the line in the sand. If we lose this 21 moving average now in the month of August, you can see here we have a big gap in the VRVP. We could easily fall down to this level, which is at $50. Now we do have some breaker points here at 65. We might get some support. We might get some support here like around 55. So it's not gonna be a flush down, but once we lose this 21 moving average, we could fall down even to this 50 moving average. You can see here that the stochastics RSI are low, but it kind of looks like we want to roll over. The RSI is still above 50. That's good, but we are also rolling over here. So the month of August is going to tell us a lot. These are tweezer tops though, so usually when we get tweezer tops, we do end up rolling over. So let's see what ends up happening. Now on the weekly chart, the stochastics are rolling over. We're below the 50 on the RSI as well. So this still has to come down and possibly reset, and this could bring us to lower prices. Right now, we are being held up by the 21 moving average at $86.11. If we lose that, we should have support here on this blue line, which is the 100 moving average at $77. But then again, look, a gap in the VRVP, we could easily fall down to the 200 moving average. That's at $45. Again, we have some stops here at 65. We'll probably stop here at 55. Now, the last time I was telling you guys that this is a possible cup and handle play because we had a double bottom and then we started flagging out sideways, but we lost this 50 moving average. Now, I haven't lost the hope for this cup and handle play yet. We would just have to readjust this. Instead of it being a flag, the handle part, this is possibly more of a falling wedge here. Now, the measured move is probably going to be a little bit less. Now, instead of taking us all the way up there, now maybe we only make it to about $140. The only thing is that we did break below this falling wedge. We are being held by the 21 moving average. If we could get back into the pattern and still go sideways, eventually maybe we could still break out. Maybe we just go here sideways until the stochastics reset, and then maybe we could break out. So let's leave this cup and handle theory here for the moment. Now on the 3-day chart, stochastics still need more room to continue to come down. We already lost all the major moving averages. It looks like the next stop here is this point of control at $76. We lose that, we could head down to the 200 moving average at $66.68. So far the charts are showing us that we're losing momentum bullishly and we might be heading down slightly lower. On the daily time frame here, the last time we made a video, we were here on July 2nd. We kind of have like this topping tail and we were above the 200 moving average. We were flagging sideways. It was looking like we were going to break out, but I told you guys, if we lose this 200 moving average again, it's possible we're going to fall down between $80 and $85, and we did exactly that. We went all the way down as low as $83.68. So if you guys follow that, once we lost the 200 moving average, this is technically a winning trade. Now what I'm seeing right here is that this is a head and shoulder pattern where this is the left shoulder, this is the head, and this was the right shoulder here, and we already lost the neckline and we already started making most of the measured move here. Now the full measured move to this will technically take us all the way down to about $65. So if we lose this 100 moving average, which is what we're holding as support right now, I could see us falling down. We see the gap here in the VRVP. We should have some support here in these areas, but this is technically still in play unless we could get back above this 200 moving average and ultimately above this 21 moving average at $104. Now the stochastics are low enough here that we could start moving back up, but this could also drag here for a while. So unless we could get back above this 200 moving average or pretty much at $100, $20, I do see more downside for Robinhood at the moment. We head over to the 4-hour time frame. Stochastic is dragging here for a while. Now we are bouncing off of this 200 moving average. We're currently trying to hold it, but there's a lot of wicks here. If we lose this, that's where I see the rest of the measured move of that head and shoulder pattern possibly playing out on the daily time frame. If we could stay above this and get back above the 21 moving average and ultimately above this 50 moving average, then we could start talking more bullishly and see if we could go and test that $120 resistance that we lost before. Now on the 1-hour time frame, this is not looking good. The stochastics are toppy. We're rolling over. The RSI never made it to the 50 line. We started rolling over and we have not been able to get back above this 21 moving average. Every time we kept on getting rejected, and this one time that looked like we were about to break out, we just got a big red engulfing candle. So again, this is kind of showing me that we're probably going to go back down and test $80, and we're probably going to test a range between $70 and $80. And then if we cannot get above that, then I do see lower prices. So I do see us possibly coming down as low as $70 right now for the short term on the Robinhood stock. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.